want something more? I mean, more meaningful moments, opportunities, deeper relationships, and memorable experiences. Do you want to make a difference? If you said yes to any of that, a career in real estate could be the opportunity you're looking for. Guiding people through one of the most important decisions they ever make, the purchase or sale of their home, could be both rewarding and lucrative for you. Exit Realty's revolutionary compensation model, training, and technology provide you with the tools and resources you need to start and build your successful real estate career. Call Exit Realty Low Country Group today at 843-619-3005. That is 843-619-3005, or visit join.exitlowcountry.com and make your exit today. So good morning and great morning to you guys. Welcome to another fabulous episode of Exit Strategies Radio Show. Hey, I am your host, Corbin J. Millett, broker and owner of Exit Realty Low Country Group in beautiful North Charleston, South Carolina. So hey, if this is your first time listening to this show, you, sir or ma'am, are in for a treat, because our mission here is very simple. That is to empower our community through financial literacy and real estate education, guys. We are legacy building. That is what we do. So guys, thank you so much for tuning in today. I'm super excited for our guests for this show, because we're going to have a blast. I want to give a shout out to those who listen to us faithfully. Guys, look here, I am always overwhelmed by the response that you guys give me when you bump into me in the streets. From those folks that tune into us faithfully from Monkey's Corner, that's where my mama live, all the way down to Hollywood, which you know good, guys. I love y'all, and I want to say thank you for doing what you do, which is tuning in and listening to our show. For those of you in other parts of the world, other markets that are catching us on our podcast platforms, hey, and on our website, guys, you rock. Please continue to tell others about us. Please continue to tune in, because we're going to keep bringing you all that we got whenever we can, which is all the time. I love you. So guys, look, it's time. Look here. Let me tell you about these people today. For y'all watching, y'all see we got two today. Look here. We want 2 for 1 today. We want the special. So guys, we have with us Ryan Twomey and Lucas Ravanis. They are the founders and managing partners, guys, of TR Capital Partners. So let me tell you what this means. What that means is they got capital and they're investing it. All right. They are currently a real estate investment firm with over 500 units, delivering an average return of over 20% for their investors. That is in itself mind-blowing. And they're going to tell you how they did it and how you can be a part of it and how you can do it right now. So Ryan, Lucas, welcome to Exit Strategies Radio Show, guys. How are you?
Great to be here. Thanks for the intro.
Yeah, I'm really excited to be here.
Well, look, I do what I can. Just so you know, I'm available for services. You can hire me. I'll introduce you anywhere. So Ryan, Lucas, if you don't mind, give our listeners that 50,000 foot view of TR Capital Partners. If you don't mind, tell us how you guys got started and what it is you guys do.
Yeah, so I guess going back to the beginning. So I've known Lucas since I was 7, 8 years old. We played Little League together, had the whole childhood, grew up together. About 5 years ago, we got invested in our first real estate property. Those were triplexes, duplexes, small stuff with our own money, managing it ourselves, dealing with tenants. And about a year into that, we realized two things really. It's hard to scale that way because you're saving for a down payment and to try to purchase a property every year or whatever it might be. But also we started experiencing all the landlord horror stories. So we had tenants that were not paying rent, maintenance calls every week. We went through a first eviction, which was great. It was very fun, stuff like that. So we realized that a lot of this stuff, even though the income's great, it's not technically passive. And that was our goal when we initially set out. And knowing that those horror stories deter a lot of people from investing in real estate in the first place, because there's an instant correlation to parking your money in a property and then having to be the landlord, we started TR Capital Partners to provide investors the benefits of real estate, like the passive income, the equity growth, the tax benefits, without the hassle of being a landlord or doing any of the dirty work that goes into it. So we do that through what's called a private equity real estate syndication. And we act as the general partners on that and do everything as far as finding the properties, negotiating with the seller, managing the business plan and the property on behalf of our limited partners, who are the LPs, just looking to invest their money and have it grow for them. So we like to say, you invest and we do the rest, is what it comes down to.
I love that. So I'm going to ask you, Lucas, because you said a word in there that you talked about on this show. Okay. Let's break it down. Syndication. So you guys, you syndicate. Break that as a matter of practice for our average consumer.
Yeah, so a syndication is a fancy word for pulling your money together with other investors to buy an asset. And in this case, the asset is real estate. And you do this because, one, when you pull your money together, you're able to obtain assets that you wouldn't be able to obtain on your own balance sheet, but you're also mitigating risk because you are involved with a general partner team. And when we started TR Capital Partners, like Ryan said earlier, the real goal of investing in real estate was to get passive income, right? Create another stream of income that was passive in nature. But when you're owning your own property, it's a second job, right? There's nothing really passive about it. You say, sure, you're getting monthly rent, but you're still in charge of everything. So how a syndication works is, like Ryan said, there's two parties, the general partners and the limited partners. And the general partners, we work as the landlords and provide returns on behalf of the limited partner. And the limited partner, they're just investors. So they get mailbox money where they get to kick their feet up, relax, and get monthly updates from Ryan and I and our general partner team. And then quarterly payouts. Of course, you get tax benefits because you are an owner of that property. And then, of course, the equity payout at the end. So our average return structure is anywhere from 20% ARR to a 2 to 2.2 equity multiple, which means whatever your investment amount is, by the end of that property, still we're going to do it. And if our metrics and our underwriting don't show, we don't for that property.
Wow. Okay. Yeah. Them some good numbers, man. That's awesome. So what drove you guys to go in this direction? One of the things I talk about and I share with people that got me in the direction I am is I had a desire for myself. And then I realized that, wait a minute, I can help and serve other people in doing the same. So is that kind of what the direction that you guys took? I wanted to do this. We want to be real estate investors, want to be holders, and then boom, whoa, wait a minute. Well, nobody want to do this part. We'll do this part and we'll get other people and help them. Is that kind of what your thought process was?
Yeah, I think it was like multifaceted. There's a bunch of different reasons we chose to do it. One was we both wanted to escape the rat race, was the initial goal when we started small, our own properties, and wanted to essentially have that rental income replace our current income to pay for our expenses and then have time freedom. Once you realize that's very hard to do unless you can scale up, that's when we had that light bulb moment. We also had friends and family asking, how did we go about this, trying to learn from us. And that's one of the reasons we stepped into the syndication space, because we can give them the impact and our experience, and they don't have to go through like the learning curve that we went through, where they can get on board with us and we can just do the management side on our own. That way we can get out of the rat race because we're running our own business, and we can provide the benefits to others. And at first it was friends and family. Obviously it's scaled significantly since then because you have other investors involved. But I think a lot of it just came down to time freedom and then having an impact on others to help them achieve the same. Because both of us came from the typical traditional family where you go to school, you get a job, retire at 40 years. For me, that was not for me. And I think people are starting to realize that they don't want to do that either, especially when they see the stuff on social media, they read these books, and there's ways to get out of it. I think that this is one of the best ways we can help people keep their money on the taxes, but also make it put to work harder than them and get them paid every quarter without trading their time for money, which was the biggest thing for us.
One of the things I just heard you say in there, Ryan, basically is life by design. I don't want to live this way. I want to live this way. So I'm going to design and create the life that I want by doing this. So I don't want to bring up bad memories, but tell us about the first time. Tell us about the first property.
So that first property, that is the cornerstone of what TR Capital Partners is built upon, right? So we bought that property, and that property is renovated by friends with 30 packs of beer and a couple of pizzas and YouTube tutorials. We're going in there. We bought a triplex. We're house hacking it, and we got two really ugly units above our head that we got to fix. And we're like, you know what? I got a hammer to my name, but I have internet. Let's figure this out. So that first property was so valuable to us because it gave us that active experience and understanding, creating systems of finding tenants and cash flow. That was so pivotal in us figuring out, wow, real estate has a lot to offer. And it was a ton of fun doing it. But obviously, when it comes to real estate and investing your own capital and owning the property, there's going to come a time where, and it's inevitable, but there's going to come a time where there's a fork in the road. And that fork is, I either hate this property and I don't want to do it, so I sell it, or I suck it up. And it may not even because you hate it because it's a pain in the butt. It could just because you don't have the time or you don't want to give the time into it. So you either sell it and lose that asset, or you suck it up and you keep doing it that way. And we realized we didn't want people to be in that fork. There is a better solution here. And it's not necessarily about how much money you make. It's about how much money you keep. And this is such a valuable tool for people who don't realize there's alternate investing vehicles that can just help them grow their wealth passively. And we've seen those benefits firsthand. And our entire mission is really just trying to spread these benefits to as many people as possible.
You hit on something there, Lucas, that people don't know. They don't. They believe they know because they watched a YouTube video or they saw something on social media, and then they want to argue a point without the full understanding. Like, I don't know your faith. I don't want to go too far, but I tell people it's really no difference than reading the Bible verse and think they understand the real and can recite the whole Bible, so to speak. But let me ask this. What did you find was, and this kind of talks to mindset, but what did you find like the ideal investor? Like, who were your first investors? Was it friends, family? Because you guys pulled off a house hack with pizza and beer. Bro, y'all know what y'all doing. You know what I'm saying? Because that's a lot of coordinating. Okay, look, I need you to do this. Hold on, take the pepperoni. I'm going to give you this deluxe, whatever that might, and it might be PBR, it might be something else. But anyway, if you're able to pull that off, and obviously it worked, I'm assuming you guys lived in one unit, fixed up, rented the other units, got the property cash flow, probably restructured it, and then moved on to another property. Is that kind of what took place?
Yeah, that's exactly what took place, actually.
So your first investors, who were they? What was their mindset? Was it grandma, or was it friends, or was it somebody random that saw that you guys had this figured out and was willing to, quote unquote, write the check to help you continue?
Yeah. So our first investors, actually, there were 6 of them. They all brought in $100,000 or more, and they were all complete strangers to us. So we actually built out our network of people. Once we knew we wanted to just keep scaling, we took the steps that we needed to really build our network up of like-minded people that had more money and could do that. Because our family or friends, they didn't have crazy liquid capital to really throw into it. We were only a year or two into it at this point, so I'm not sure they'd trust us with that much money either. So we essentially had to build our network up. We sold ourselves and our plan, our experience to people that were investing. Our first large deal was actually an RV resort, which we found in Louisiana. So we partnered with a sponsor that was there. And that was a home run for us. But a lot of it came down to really just building out our network. And that's where, in our opinion, the best opportunities and the best relationships come from, whether it be from capital, the deal coming in, operating it correctly. It all comes back to relationships. And that was a key pivot in our growth, is just purposely, intentionally developing specific relationships, as opposed to going about your day and not really focusing on things like that. So, I mean, we might be able to speak more to that, but it was definitely not easy. And there was a lot of strategy behind it. And it really comes from a point of view of just serving others and creating value for other people.
I think I can even add to that too. Like, as anybody who's a first-time entrepreneur trying to get people to invest into something, 9 out of 10 times when you ask somebody you haven't done anything yet, the response is, well, let me know when the next one is. Let's see how you do on the first one. So there was a huge learning curve to Ryan and I just figuring out the business and how to actually persuade people. Luckily, like Ryan said, we networked with some really successful individuals that boosted our track record, and we relied on them just as much as they relied on us. And we hit a home run with the first deal, which fast-tracked us into scaling. That doesn't happen to everyone. There's a lot of people who don't do well in that first deal, and it slows down the progress. So we were very intentional with how we went about sourcing our investors. You mentioned earlier, who's your ideal type of investor? With these syndications, it's not a small amount of money that's required, right? Usually the minimum is $50,000. So an ideal investor is somebody who has $50,000 sitting in the bank account or parked somewhere that is just not getting the returns to grow that it could get. Our ideal investor isn't somebody with $55,000 to their name. So we have to find these people who are looking for alternative investing, but they don't have the time or they don't want to put in the time to do it themselves. So that's our job, is to get in front of those types of people to help them make their money work harder than they're working.
Makes perfect sense. I love this. So you guys are obviously continuing on. So currently you're into larger scale development. So I'm assuming you have multiple sites, maybe 50, 100 unit apartment complexes now is what you guys have scaled to. Does that sound about right?
Yeah, so specifically speaking, we don't do any actual ground up development. We like already standing multifamily apartment buildings. And we want to purchase these buildings in very specific markets. And these markets show year-over-year job growth and population growth with limited supply. Those are the indicators that we want to find apartment buildings there. And then with these individual apartment buildings, we treat them as their own business. And the name of the game is net operating income. So at a very high or low level thinking of it is all we need to do is renovate the properties to increase the income and decrease the expenses. That's called forced appreciation. So we're pumping value into it, that property, raising the net operating income, but we're also taking advantage of the natural appreciation of that area. So we're very specific and intentional of where we purchase.
Makes perfect sense. So guys, got me excited because I want to go back. For those who are watching, y'all saw me maybe almost jump out my seat when you said the RV, because my next like big purchase, if you will, I say personal big purchase, business wise. Well, matter of fact, it might be a business purchase. That's another story. But an RV, I love Class A's, man. They're beautiful. And I know a few people that same thing. They bought RV resort, went in, essentially refitted it, upgraded the amenities, all that stuff, and changed the parking paths, maybe added more in, got that thing cash flowing, and they cash flow amazingly well. And then they flipped it off to another investor to hold just for the residual income or the return on the investment. So there's a tremendous market for that, as well as the other arenas that you guys are currently in. So that is awesome. Awesome. So again, you guys have figured out how to essentially put it all together. You guys are the mastermind, if you will. My assumption is, and correct me if I'm wrong, but you guys are, as you're establishing these partnerships, what you're doing is taking a small piece of the partnership as well as an oversight as well, correct?
Yeah, so every deal is structured pretty much the same so far, what we've done. And in the syndication, it's pretty standard. It's 70-30. Limited partners own 70% of the deal. General partners own 30%. But there's a caveat in there that protects the limited partner even further. It's called a waterfall distribution, waterfall structure. And that's an 8% preferred return to 10% preferred return, which is what we have on our deals as well. So what that means is all the cash flow that comes in, that's profit from the rental incomes, 8% of the investor's investment annualized has to be paid out to them before me and Lucas or any of our team even sees a dime. So what that incentivizes us to actually make sure it's performing and we're on top of things, because we don't get paid unless you do. And it helps everyone win in the end, right? So we pay out that 8% first to every investor, and then all the profits after that, let's just say it's 100,000, 70,000 of that will go out to the limited partners based on the percentage ownership. And then the 30 grand will be split up between Lucas and our partners as well. So typically you're seeing 10 to 12, even sometimes higher, as far as your return on investment in the cash flow side every year. But 8% is essentially that minimum you can expect before we get paid. And then the rest is split 70-30 between GPs and LPs. And then everyone on the GP team has a specific role. So based on how intensive your role is on a day-to-day basis or weekly basis determines your share of the GP shares. Well, that's just a deeper conversation. That's how the deal structures are broken down now.
So let's say that somebody says, hey, you know what? I want some of that. How do they get in contact with you? Where do they reach you? What does that look like?
Yeah, so our website is kind of our go-to platform for anything educational to get in contact with us. We also are big on LinkedIn and Facebook and Instagram as well. But I would say go to our website. It's TR Capital Partner. And you'll find a ton of information there as far as what we talked about a little bit today, but way more in depth. You can schedule a call with us. If it's a good fit and this does meet something that would help you and your goals, we'll then take it to the next step and we'll send you some example deals we've done in the past. So we can't really send you stuff we're currently working on without a prior relationship. So what we like to do is send you stuff that we've already closed. And that way it gives you an idea of what we're working on, the returns you can expect, how it will impact you as an investor. And then we'll set up a follow-up call where we can dive more into the nitty-gritty of things and on a deal-specific level, where we're talking about an actual potential opportunity as opposed to syndications in general and just developing that relationship on that first call. From there, we do it in like an investor portal, which we'll send you a link to. It's free registration. You can picture of it like an E-Trade account, but for your properties that you're invested in. So that'll be your go-to place to get updates, track your performance, collect distributions, whatever it might be. And you can sign up there and you'll see all of our current, future, and past opportunities as far as what's available to investors at this time. And from there, you just pick one, enter your investment amount, fill out some paperwork really quick. That's e-sign and wire your funds. And you now own real estate. You're a part investor.
Awesome. So for our listeners, guys, look, on the website, I'm going to hit you with guys with one more thing as a thought process. And for those who may miss this piece of the content, please make sure that you go to our website or your favorite podcast app, because you might want to hear this. But guys, look, you're investors. So again, you talked about money, certain amount of money sitting around, but a lot of times investors or those who have, okay, look, I want to do something more. I want to see my money do more, because we always talk about this. Sometimes this generation talk about making your money rain, but sometimes we just want our money to actually dance. So, but that being said, my imagination says, but I also know that you can use your 401k in order to invest, and you guys can do self-directed IRAs and all that kind of stuff as well. Is that correct?
Yeah. So that's actually our most common form of investment. Is our investors have an old 401k. So that's the stipulation. It can't be a 401k that you're actively contributing to. But if you have an old 401k sitting around that's not really doing anything, we have connections with different self-directed IRA custodians that we would connect you with. They would help you transfer that old 401k into a self-directed IRA. And then through that self-directed IRA, you can then invest in real estate assets. So that is the most common way that we actually do have people invest. And we think it's incredibly powerful because that gives you access to capital that you have that you don't really even know about. And it's not working that hard for you. So what's it get? Like 4% a year, if that? Yeah, well, let's make that 20. And it's doing the exact same thing. So that's our most common way.
Yeah. So with this SDIRA, self-directed IRAs, obviously we're talking real estate right now, but you can actually take control of your retirement in full. You can invest in anything you want for the most part. So even if you're not looking to invest in real estate per se through your SDIRA, I personally would recommend just getting one anyways. And then that way you at least have control over where your money's flowing, whether that's stocks, crypto, whatever you're into. Could be anything, could be precious metals. But obviously we choose real estate because we think it's the superior asset class. But that's such a good way for people to access money that they put it to work that they thought they didn't know they had to pay a penalty on or weren't able to touch until they were 60 years old, whatever it might be. So that's something that we like to help people out with as well. There's also some educational stuff on our website around that as well, and some contacts you can probably contact through our website that can help you transfer those funds over.
Yeah, that is very useful information, guys, because people just sometimes they don't put that piece of it together. And I get it, I understand it, but currently our tax structure allows you to make this investment through a self-directed IRA. Those returns come back and fund your IRA, and they're tax deferred. And just as a note, I don't know about either of you, but if you are, speak up. We're not tax advisors or accountants over here or attorneys. So that's our disclaimer right there. So you heard it, but talk to your tax advisor, talk to your tax attorney, and discuss these options, guys, because we're letting money sit on the table that shouldn't be, or better yet, having to pay taxes on money that if we structured it differently, we wouldn't have to do that. So that is something that definitely, guys, I'm so glad that you guys were able to get that in for our listeners so that they can understand, look, it's a lot of different ways to start, but when you start, there are more creative or in particular ways that you are allowed to follow or paths that you can take that allow you to increase your wealth. That's how you build wealth, right? That's how you build wealth. So guys, look, how can our people reach out to you otherwise? So we talked about the website. They can schedule an appointment. You guys are on LinkedIn as well?
Yeah, LinkedIn, social, we're on all social medias, both personal and our company pages, and then the website and would be our go-to ways to get in contact. We're always looking to have a conversation with anyone that's interested, or at least just try to educate them further on, like you mentioned, different ways to grow your wealth and keep more of your money and get out of that rat race lifestyle sooner than you expect. So
Awesomeness. Awesome. So guys, I want to thank you for being on the show. So I have this, I call it's that old 2020 scenario, right? Hindsight, all that stuff. And I'll frame it in a question. I want both of you guys to answer. If you had a magic wand and can go back and start over, I say start over, but go back whatever time period you want to go back, what would you tell yourself? You know, if we were Back to the Future and you were Marty McFly, I like that. If you're Marty McFly and you're able to go back and see your former self, what would you tell your former self to do differently that you think would have catapulted your success much further than where you guys currently are?
Yeah, I would say I'm actually extremely grateful and like everything we've done as far as like failures, learning curves, and how we started our approach. But I think the biggest thing you could possibly do, and this is something we took months, maybe even a year to do ourselves prior to investing in that first property, was we educated ourselves. We read as much books as possible. We played out different scenarios based on different properties we saw. We made sure that we knew exactly what we were getting into. And I guess the one thing we missed was we were a little naive about the landlord thing. So maybe a little more education there would have helped. But I think just make sure you're educating yourself and picking the right option for you, because there's so many ways to invest in real estate. Obviously, everyone thinks landlord, manage it yourself, but there's hundreds of ways to get creative and do this and make money this way. So I think finding the right option for you based on your goal and then educating yourself on how to do that and not rushing into anything is going to be the key to actually, one, starting off strong, but two is to continue your growth. A lot of people flame out because they, something happens, whether it's greed or they bet on emotion or they get impatient. So those are the biggest factors I think that have helped us grow.
Awesomeness. Awesome. What about you, Lucas?
Yeah, I would say so. There's two quotes that drive a lot of what I do. The first one is, you don't know what you don't know. And I apply that to just continuous education, right? A lot of our success had to do with networking, and networking can be very uncomfortable sometimes, especially going to physical networking events, because you really don't know anybody or don't know what to expect the first few times you attend. I would, to my former self, I would try to put myself in uncomfortable rooms earlier in my life to fast track the networking. Networking has opened up so many doors for me. And if I could just I'm only 28 right now, it's great to see where we are right now, but I wish I did this earlier. I would recommend that to everybody, right? Your network is your net worth. And if you can go out there and put yourself in uncomfortable situations to be comfortable, you'll fast track your success. And the other quote is, be 1% better today than you were yesterday. And that's just the same idea of just incremental improvements, right? Make one more phone call, right? You're tired, but you need to do something. Just do it. And just knocking out these little things that your mind tells you you don't want, but you need to, that's going to fast track success so much further. So being 1% better today than when you were yesterday is something that I wish 15-year-old Lucas knew, right? That is something that has really instilled a lot of character into me today.
I love it. You read Sales Gravy, didn't you? One more. Love that guy, man. Love that guy. So guys, thank y'all so much for that. Thank you for that insight. And thank you for sharing not only your story, just that it can be done. Sometimes people really miss that. They kind of tune out. They get limited in their thinking and they in turn hinder or stifle their results. So thank you guys for sharing what TR Capital Partners is about, what you guys are about, and what you guys do. I really appreciate that.
I appreciate you having us on. I hope there's some value that some of the listeners could take from this and start their journeys or keep continuing them. So I really appreciate you having us on today to speak on that.
You're more than welcome.
Carmen, you're the man. Appreciate everything. This was an awesome conversation.
Awesome. Well, I appreciate you. So one more time for all of our listeners, guys, I want to say thank you for tuning in to today's episode of Exit Strategies Radio Show. Y'all know how I feel. Y'all know what I say. Y'all know I always put the two of those things together, and I say it to you this way, which is, I love you, I love you, I love you, and we're going to see you guys out there in those streets.